Hello guys, welcome to EduTap. I'm your mentor Veer and I welcome you all in the banking awareness series, and this is the lecture 2. In this lecture, we will first discuss about the different types of banks and then we will take up the different banking types. So without wasting any time, let's get started. But before starting our today's video guys, if you are new here, please do subscribe to our YouTube channel where you can find the daily updated videos regarding the different courses that we are offering. Moreover, if you want to download the free material that we are offering, you can check out our Telegram group, the link of which you can find in the description box. So guys, now it's time to start our video of the day. So guys, before starting the different banking types, first we need to understand what is a bank. So rather than going into the functional aspect, let me tell you the role of a bank in an economy in very simple language. So guys, you might be gone to a bank for some or the other purpose, might be for depositing the money or might be for applying for a loan or maybe for some other financial service that bank provides. But what bank actually do in an economy? Banks actually transfer funds from the surplus sector to the funds deficient sector. How they will do that? Suppose there is a Ram who is having fund surplus. So what he will do? He will deposit his funds at the bank. And then there is Sham who is in need of money. He goes to the bank that please provide me a loan. So what bank will do? He will use the money deposited by Ram and transfer it to the Sham. But there is a question that might come in your mind that, sir, what will happen if Ram comes? So for that, there are millions of customers who are depositing their funds with the bank, and not only millions of customers depositing, there are millions who are withdrawing their money. So this is a chain which will go on and on and on. So this is basically the role of a bank in an economy. It transfers funds from a surplus sector to a deficient one. Who has surplus funds will provide funds to the one who is in need of funds. Okay, so guys, I hope you have understood the meaning or the role of a bank in an economy. Now what we'll do, we will move up our first one step ahead. Now we will try to understand the banking structure in India. So guys, banking structure in India is something like this. There is an overall regulator of banking sector, which is also known as the central bank of the country. And in India, it is named as the Reserve Bank of India, established under the RBI Act of 1934. So guys, we have understood who is the regulator of the bank. Now we'll move to the classification of different type of banks. So the classification goes like this. There are first class, which is known as the schedule banks. What they are, we will get to know it. Then the next class is non-schedule banks. Then there is one more class which is development banks. So guys, first what we're going to do, we will study what this schedule and non-schedule banks are, because they are quite similar with each other. And then there is a completely different class which is developmental banks. We will get to know about them in a separate slide. So let's start with the classification between schedule and non-schedule banks. So guys, here is a tabular form which is a lot of information is given, but what will we do? We will make it much simpler for you. So guys, as the name suggests, schedule. So schedule banks are those that are included in the second schedule of RBI Act. Second schedule of RBI Act. So when I am saying schedule, what it means, guys, whenever a law is passed, there are different schedules to that. Okay, so it is one of the schedule in which these banks find their mention. In very simple words, we can say this. Okay, so those that are find their name in the second schedule of the bank, they will be named as schedule banks, and those who are not, they are non-schedule banks. So I hope now the names might seems quite easy for you. What are schedule and what are non-schedule? But what is the advantage of having their name in the schedule bank and not having their name in the second schedule? What is the advantage? So first thing, that what is the criteria to be included in the second schedule? First we will discuss this and then we will move to our previous question. So first advantage is, or first criteria is that you need to have a minimum paid up capital of rupees 5 lakh. This is the criteria, and you does not harm the interest of depositor. So if anyone is depositing money at your bank, so you do not take any action that will harm the interest or harm the depositor. Okay, may suppose if I am depositing money at the bank and bank will use that money to play some lottery and lose all that money, so bank cannot do that. Okay, so this is the criteria that to be included in the second schedule, your minimum paid up capital should be rupees 5 lakh and your interest should not be to harm the interest of depositor. So this is the first criteria. So all those banks who do not meet this criteria will come under non-schedule banks. Okay, because they might not have that much of capital, minimum paid up capital. Then if you are included in the second schedule, so there has to be certain advantage or disadvantage. Okay, so what we have done, we have till now discussed what is the meaning of schedule and non-schedule bank, because if your name is in the second schedule, it is the schedule bank, and if it is not, it is non-schedule. Then we have discussed what is the criteria to be included, that is 5 lakh and your interest should not be to harm the interest of depositor. Okay, then if there is any advantage or disadvantage associated with if your name is included in the second schedule, so yes, there is certain advantage as well as disadvantage. That is cash reserve ratio. There are certain requirements which you need to meet up after your name is included in the second schedule. Like you have to maintain cash reserve ratio with the RBI, but there are certain advantages as well. Advantages like that you will be allowed to borrow money from the RBI. In case you need some money, you can borrow it from the RBI, whereas non-schedule banks cannot do that. No. Then there has to be, you have to periodically submit the returns. No such provisions for the non-schedule banks. Then you can become the member of clearing house. Clearing house, it is a part of financial markets. We will get to know it in that lecture. Okay, so member of clearing house you can become, but non-schedule banks cannot become the member of clearing house. Okay, so guys, definitely there are certain advantages when your name is included in the second schedule, and there are certain disadvantages if your name is not included. Okay, so guys, this is about the difference between schedule and non-schedule. I hope this much is pretty much clear to you. Now we'll move on to the next class, which is developmental banks. So we have discussed about schedule and non-schedule banks. Then we are moving to the third class, which is developmental bank. And guys, as I mentioned it earlier, that these are the specialized banks. These are formed through the act of a parliament for certain particular reason. When I am saying certain particular reason, let me explain it to you in a broader sense. Guys, like there are commercial banks. Let us take an example of commercial bank. Any of an example like SBI. So when I am saying SBI is a commercial bank, so its main motto is to do the banking service, but also to generate profit. Because that's the meaning of a commercial activity. Why you are indulged in that activity? Just to generate a profit. Whereas the requirement of development bank is not the generation of profit, but to bring in the development within the economy. And as I mentioned that they have been basically the laws have been enacted to establish development banks, is that they are formed for a one particular reason, which is development. Doesn't matter if they lose or they started making losses or they start generating profit, their sole motto is the development of an economy. Now let me bring you the structure of development bank so that you can understand what I want to convey to you. So guys, the structure of development bank is like this. There is a three class. One is industrial development banks. These banks, the motto is to provide growth to the industrial sector in the economy. Then there are agriculture development banks to boost the rural economy or the development of rural economy. Then export and import banks. These developmental banks are established to promote the export and import from India. Then the last is housing development banks, just to basically to develop the housing sector of an economy. So guys, there are very good examples from which you can easily understand, and I will take up only one example, rest you can see from the slide. For the development of agriculture economy, the all India level development bank is NABARD. NABARD. Guys, you know that this bank is established for a sole motto that it helps in the development of rural economy. Not only in terms of providing credit, but also providing the infrastructure facilities and other developmental activities. So this is what is the role of NABARD. Then another all India level institution or all India level development bank regarding export and import is Exim Bank. Similarly, for the housing development, it is National Housing Bank. And there are different industrial development banks like IDBI, IRBI, ICICI. So these are the meaning and the classification of development banks. I hope now you are pretty much clear with what do you mean by development banks. Okay, so guys, till now what we have studied our structure of banks in a three broad way. One is schedule and non-schedule banks, in which we have discussed what are schedule, what are non-schedule, and then we have discussed about a specialized class which is development banks. Now guys, we will move one step ahead. What we'll do, we will now discuss schedule banks and non-schedule banks one by one in detail. So guys, schedule banks are further classified as commercial banks. We have already discussed the meaning of commercial bank. Their sole motto is to generate profit through the banking activities. Then the other class is cooperative. So let's first start with our commercial banks, guys. So there are four types of commercial banks. Number one is public sector banks. As the name suggests, public sector banks, it means that they are being who is the regulator, or basically the owner of these banks is the government. That is, more than 50%, 51% stake is being owned by the central government. So these are the public sector banks. Then there is private sector banks. Again, the ownership resides with some private entity. Okay, so this is the difference between public and private sector bank. Then the next is foreign banks. Foreign banks are basically, they are established or headquartered in some other country, but they have branches in India. So this is about a foreign bank. And then there is a special class of banks under commercial bank, which is RRB, regional rural banks. Again guys, though their motto is to also generate profit, but they are being established for the development of rural economy. So this is the classification of commercial banks. Now let us see the examples of these. Like public sector banks, there are 12 public sector banks at the moment. And these are SBI, PNB, Bank of Baroda, Central Bank, Union Bank. And these are the 12 names of public sector banks. Then private sector banks. Here is a list of private sector banks like Yes Bank, Axis Bank, ICICI, HDFC. Then foreign banks, HSBC. Again, I want to say that these are the banks that have their headquarter, or they are being established in some other country, but now they want to establish their business in India. So they are establishing the branches in India. So these are the examples of foreign banks, and then there is RRBs. So guys, now there is one more point regarding the composition. We have already discussed the ownership of these banks is by the government. More than 50% stake should be with the government at all the time. Public sector bank, private means they are owned by the private entity. Foreign banks means some foreign company or some foreign entity is the owner of these type of banks. Then RRB, who is the owner of RRBs? There are three entities, guys. One, the central government, then the other is the state government, and the next one is the sponsoring bank. And this is the ratio in which the ownership is retained. Central bank will bring in 50% of the contribution, sponsoring bank 35%, and the respective states. Suppose you are establishing an RRB in the state of Uttar Pradesh, so Uttar Pradesh government will bring in 15% of the required capital. Okay, so this is the classification of these banks. Now guys, there are further few important points regarding the banks, especially the public sector bank and the private sector bank. Regarding the FDI cap, how much is the FDI is possible under the public sector bank? So guys, there is a cap of 20% in the public sector bank. Then in the private sector bank, the maximum cap is of 74%, which is 49%. Up to 49% of FDI is allowed under automatic route, and from 49 to 74% it is through government approval route. So maximum is 74, and I have given the further classification of FDI for each of these banks. Now guys, there is one more rule. One more rule is that for a bank to have a license, the maximum stake that an individual or promoter can have in any of the bank is 10%. Okay, so these are the important points regarding the commercial banks. I hope each of the point is clear. Now we'll move on to the cooperative banks. So guys, here is an entire list which is being provided to you, but first try to understand what do you mean by cooperative banks. So cooperative banks are nothing but basically these are the societies that have been formed, or basically in these banks, what is the customer is also the owner of the bank. Each member has a vote, and the board of director is also appointed through the customers or the shareholders. Okay, and one customer has one vote. Okay, so this is the meaning of corporate societies. And then there is further classification of corporate societies. If they are urban based, so they are known as urban cooperative society. If they are rural based, so they are known as rural cooperative society. Then urban cooperative societies or urban cooperative banks are also classified into schedule and non-schedule. Same, if they are included in the second schedule, they are known as scheduled urban cooperative bodies. If they are not included, then non-schedule. Very simple. Then on the basis of their operation, if they have operation in more than one state, it is known as multi-state. And if they are operating in only one single state, like only in the state of Uttar Pradesh, so the answer is operating in single state. Similarly, in non-scheduled bank, they can be on the multi-state as well as one single state. They can have operation in one state as well as in more than one state. Then moving on to the rural cooperative banks, they are of two types. One is on the basis of short term, they are classified into state cooperative banks, district cooperative banks, and primary cooperative banks at the grassroots level. Okay, then long terms, there are of two types. One is state cooperative agriculture and rural cooperative banks, and the other is primary cooperative agriculture and rural cooperative banks. So guys, we have discussed the entire structure in this, but the sole aim of the cooperative society is not only to provide service to their customer, but also a voice in terms of management. So the customer in the cooperative society not only a customer, but they are also a shareholder. They have a voice in the management of these banks. And guys, they can not only provide, we can say, no, it is not necessary that every customer will have this shareholding power. They can also provide the services to someone like a customer only. Okay, so this is all about the structure of cooperative credit institutions in India. So guys, we have covered the schedule part, commercial and as well as the cooperative. Now we'll move on to the non-schedule banks. Then guys, non-schedule again we do not need to discuss because we have already covered, but we will see the further classification. So there are two types of non-schedule banks. One is differentiated bank, and then there is cooperative banks. We have already seen that there could be scheduled cooperative banks as well as non-schedule. So this is automatically covered. With this we have discussed. In this slide, what we will do, we will discuss about the differentiated banks only. So guys, differentiated, as the name said, differentiated, that means something different from the normal banking services. So this differentiated means that these banks are formed either to cater to the special sector of the economy or for some special purpose. They do not provide universal banking. When I am saying universal banking, let us see what are the differentiated banks so that you can understand it in a much better way. So first example of differentiated bank is small finance bank. Guys, you know that small finance bank work as a bank only, but the maximum deposit in this bank would be 1 lakh only. Okay, so this type of bank provide almost all the services of a bank, like they provide lending facility as well as depositing facility, but the maximum deposit at any period of time could be only 1 lakh. So it is not a universal bank. It is not providing entire banking services, though providing banking service, but in a limited way. That's why it is named as differentiated bank. Okay, then moving to the next example, like there is payment banks, India Post Payment Bank, that which is owned by the post office, or we can say also the government of India. So what are these banks? These are again a specialized class of banks which provides only the deposit facility. They cannot provide lending services. And when you cannot provide lending services, so you cannot provide credit cards. Because you cannot provide loan, so you cannot provide credit cards. In this, you can provide credit as well as debit card. You can provide. But in this, you cannot provide. Okay, then again, local area banks. Local area banks are nothing but their operation is quite localized. Maybe in the close 3 districts, they have the operation. Suppose in the district of, let me take you to the example of 3 close districts. One is Meerut, other is Bijnor, other is Muradabad. So these 3 districts in the state of Uttar Pradesh are very close. So a local bank can be established to cater to the needs of only these 3 districts. They cannot expand their operation beyond these 3 districts. So this is an example of local area bank. So guys, they are providing the banking service, but in a specialized or differentiated way. Okay. So these are the examples of small finance bank, payment bank and local area bank under differentiated banking. Now guys, one point that I missed regarding small and payment bank is that the minimum paid up capital for both of these is 200 crore as of now. So if there is a news in the future that the paid up capital has been changed, so you need to update it from the current affair, but currently it is around 200 crore. Okay. So this is all about the non-scheduled banks, guys. We have discussed the scheduled bank, we have discussed the non-scheduled bank, and we have already discussed about the development banks in the previous slide. So I hope the entire structure of the types of bank is now clear with you. Now we'll move on to the different section, which is the types of banking. We have discussed the types of bank, but now we will discuss the types of banking. And guys, it is a very interesting topic and quite easy one, trust me. So guys, see, I have given the names over a fish. So first we will take up the upper half of the fish and then we will take up the lower half of the fish. You just need to understand the terms. Many of the terms are quite simple, and even the first or basically the name of that banking can explain it very clear to you. So first is para banking. What do you mean by para banking? So para banking is, guys, quite, so let's try to understand what is para banking. Para banking means when you provide the banking services which is different from the day-to-day routine. Like suppose you started selling the insurance product from your bank. So that is something different from the actual banking of depositing and lending. So that banking is known as para banking. When you start providing different type of financial services apart from your daily lending and depositing functions, then it is known as para banking. Then moving on to the next class, which is narrow banking. Narrow banking, as the name suggests, that you have curtailed the banking in some terms. What it means actually is that now what you have done, you have started investing in the securities that are risk-free. Suppose you started your funds in the government bonds only. Majority of your funds will go towards government bonds because they are highly secured. So what you are doing, you are using your funds to make it risk-free. So that type of banking is known as narrow banking. Rather than going into the rather than going into the functions of providing credit to each and everyone, because that way you will also get an exposure for NPAs. What you are doing, you are curtailing your operations. What you are doing, you are providing or you are investing only in terms of government securities to make the funds risk-free. So this is narrow banking. Then the next word is offshore. Offshore, quite simple. So suppose I am in India and I am using the facilities of some foreign bank in foreign like Swiss bank accounts. So that is known as offshore banking. Quite a simple word. Remember it through the Swiss bank account. Then universal banking. As the word suggests, universal. So you are not only catering to the requirements of each and every customer, but also providing each and every financial service. Universal, everything should be at the one stop, or basically the bank will be a one-stop solution for all the financial services. So this is known as universal banking. Then moving on to the next class, which is unit banking. As the name suggests, unit, that means there will be only one unit that is catering to the requirements of local area. Okay, there won't be any of the branch. There will be only one unit of that particular bank. Okay, if bank has multiple branches, like one in Uttar Pradesh, one in Maharashtra, so if it is spreaded all across the geographies, so that is known as branching banking. But if it is only have like one bank in India, so that is unit banking. Then investment banking. As the name suggests, investment. So this type of banking will help you to invest in financial market. If you want to invest in the stocks and all those securities, so that type of banking is known as investment banking. Guys, take out the name from the naming as well. It is quite easy for you because that way you will be able to revise it or recall it very easily. Just like narrow, curtailing the operations. Okay, then moving on to the next one, which is correspondent banking. Correspondent banking, what it means, guys, it is physically not possible to have a branch in each and every district, or maybe you can have in each and every district but not in each and every village. So what will you do? You will provide the banking facility to some correspondent. Okay, there may be some individual of a bank that is going to the village and providing the banking services. So that way it is known as correspondent banking. Example is business correspondent model. The business correspondent model will go home to home in the villages and provide the necessary banking services. Okay. So guys, if we have eaten up the first half of the fish, then we will move to the lower half of the fish. So let's start with our name, green banking. As the name suggests, green banking, that means the environmental friendly project. Suppose you are providing a loan to an individual who wants to establish some solar power plant. So that is termed as green banking. So basically to cater to the environmental needs. Then retail banking. Retail banking means normal functions to an individual like you and me. Whatever those functions include, like depositing, lending to an individual, that is retail banking. Then another class, wholesale. So difference between retail and wholesale banking is, in the wholesale banking, they will provide the banking facilities to only to some special category of customers, like large corporates, like they are catering only to Reliance, Tata, not to the individual customers like you and me. So that is the wholesale banking, and in that way it is different from retail banking. Retail banking means just a customer like you and me. Then Islamic banking. This is a new class, guys, and in this, banking is done based on the Shariat law. So whatever there is the principles in the Sharia, so that will be implied over here. Like in the Islamic banking, they do not consider generating profits, because that is considered as a haram in Islam, or basically not the Sharia law, basically the Islamic principles. So this is known as Islamic banking. Then moving on to the next class, which is chain banking. This is a guy's term which is quite different from the normal type of banking. Chain banking. So let me explain it through an example. So guys, there are, let us see, there are three independent banks: Axis, ICICI, and there is one more, let us consider as HDFC. So guys, these are three independent banks. They have no orientation or no link with each of the other. Okay. So what if someone came and take over each of these banks? But they are not merging them. They are let them work in their domains, but the ownership comes into the hand of one particular person. Like Ambani has taken over. So if Ambani has taken over, but he is not merging the entire three, all the threes are working independently. So what is the advantage of chain banking? Suppose if Axis Bank fails and other two are making profits, so the impact will only be on the Axis Bank, not on the entire chain of ICICI or HDFC, because if we merge, the entire banking system will be affected. So that is the difference of, or the importance of, chain banking. Then moving on to the second last one, which is relationship banking. Relationship banking is quite simple, guys. In this, what you do, you will design your banking product as per the requirements of the customer. But one important here is, customer should have some financial capability, guys. Suppose there is Ratan Tata. He asks that I need a loan and you need to modify your loan according to my terms and conditions. So bank will go running, yes sir, we will do all that. But suppose if we are going to the bank that I need a loan of 1 lakh and I'm not working, and because of that I need a moratorium period of 2 years and so and so. So what bank will do? Get out. So the thing is, guys, there has to be certain financial evaluation from the banking end, and also in terms of meeting to the requirement of customer. If the customer is like Ratan Tata, so definitely bank will do so because he has a financial muscle. But if the customer is like us, so definitely bank won't pay much attention to us. So that is the difference between relation banking. The products are being designed as per the requirement of customer, but also on the muscle or the financial muscle of the customer. Then online banking, guys, this is a new type of banking that is coming up. You also might heard of the name like neobanks. So this is a special class of banks that are coming up, that all the banking services will be provided online. Okay, those services are already being provided by the respective already existing banks, like Axis Bank are providing already online services, online internet banking facilities and all those. But now there is a new class of banks which is coming up, and the entire function will be online. Okay, so guys, these are the different types of banking services which are being provided in India. So in this lecture, what we have done, we have discussed about the types of bank as well as the different banking types. So guys, that's all from my side. I hope you have liked the lecture. If you have liked the lecture, please do subscribe to our YouTube channel, share it with your friends, and do give a thumbs up. Moreover, guys, if you have any doubt, please do reach out to us at 8146207241, or you can drop us an email at hello@edutap.co.in. So guys, that's all from my side. I'm your mentor Veer, now signing off.